Hey everyone, it is Evan here from the Trade Risk on Friday, August 9th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So it was a busy week for markets. It was a mixed week, a little bit of something for everybody, for both bulls and bears. We're going to jump in here to the numbers. You can see on Friday, we were red across the board. Every of the major indices were down, led lower by the Russell 2000 and the NASDAQ 100. The 5-day change numbers still all in red territory as well, but you can see getting closer back up, not the real egregious negative numbers we saw last weekend, a little bit more tame as we rebounded or at least tried to stabilize this week. We are still below the 10 SMA across all the major indices. Notice the Russell 2000 did close below last week's lows. Everything else kind of within last week's range. If we look at sectors here, we do have some climbing to positive territory now. We have utilities, we have materials, and we have healthcare in the green now over the past 5 days. On the downside, we have energy, we have Dow transports, or just the transports, and then financials for the bottom three underperforming right now. For major markets, it's silver, it's gold, it's TLT, and on the downside, it's China, it is oil, and it is emerging markets. So let's jump into the charts now. Let's take a look at this week's action. You can see first and foremost, we did get a nice reversal off of this week's lows. In fact, it was about almost a 4% rally that the S&P 500 staged from the lows of around 28.22 all the way up to where it closed a little over 100 points higher, 29.31 on the week. That is encouraging, or that is constructive for the bull case to at least see some stabilization here. Of course, the downside is it was still a down to flat week, right? So we got that initial follow through lower to last week's breakdown candle. We had the biggest down week of 2019 was last week's bar as it broke below 5 weeks the lows. It also lost that 29.55, the prior all-time highs, and we did get that initial follow through lower this week. And then, of course, the reversal back up to nearly flat here on the week. So that leaves us in sort of an interesting and mixed spot. This is why I say that this week kind of left something for both the bulls and the sellers to continue to kind of cling onto right now. For me, again, I like the fact that we did at least find some stabilization this week. That is a good sort of encouraging piece of developing price action. However, I do not think we are out of the woods at this point. We still have work to do. We still have more to prove to really kind of signal to us that, you know, the all clear is sort of in, the bottom is in, and yes, it's safe to kind of jump back into the pool. I think we still need to be cautious here. Again, this is always going to depend on your specific time frame and what your strategy is, how active you are in the market. But at least from the context of the short to you know, let's call it 1 week to 1 month out, I still think we do need to be a little bit cautious here and not get too excited about this bounce. Let's see next week if we can now put a follow-through week to the upside. Just like last week, we're kind of wondering, well, will the sellers follow through lower and really continue to cause technical damage here? And that answer was, well, not really, right? They initially did, but they didn't hold it to the end of the week. We closed again back flat with this bullish looking short-term reversal. So now we're going to just really flip the stage here and say, okay, now can we get bullish follow through to the upside? And when you have such of this higher range, the more volatility, the elevated VIX, and you have that back and forth, this is the hallmark of chop, and you need to be careful as a trader not to, you know, get too excited, kind of chasing the lows, chasing the highs. It is, you know, tends to be in a more volatile environment like this, a more kind of mean reversion. You know, as soon as you think momentum's there, it reverses and flips the other direction. So as a trader, I think, again, kind of like what we really left with the outset message last weekend is you don't have to be in a rush to trade. And I still believe that to be first and foremost, most important right here is that the chop is likely to continue, or at least this two-way trading is likely to continue. If you're a day trader, this is great. If you're a swing trader, this can be much more problematic. So sitting on the sidelines and kind of waiting it out, waiting for the real clarity or the A+ setup that you have is probably going to be your best course of action here. So in terms of levels for the S&P 500, 2955, that level's been on there for a while. Again, that was the prior high back from May. I would like to see us back above there. If we can get a nice weekly close back above 2955, see the VIX come back down south of 16 or so, that to me would be encouraging. That to me would give me a little more kind of comfort in this market. But until and if that happens, again, I still want to be a little bit more cautious here. We've just come 4% off of the lows. So for me, at least the way I look at it, I want to be, mindful not to chase something at this point right now. I rather, miss the next 2% for a little more confidence, or 3% for a little more confidence, and then start to, build up positions if the trend and if the bottom is more convincingly in. As of right now, 29.55 to the upside. On the downside, let's go down to the daily chart for the S&P 500. We had this level at 28.72. This was an important prior sort of midpoint inflection area. We've been dancing all around it. Market doesn't seem to care about it all that much anymore, but we're going to keep it here just for now. And really, I'd say the lows here from Friday, if you look at Friday's candle here, this was an inside range for the S&P, and you can see it was a pretty large range. We closed, just slightly down here on Friday, but we came all the way down to 2900 even before reversing. I would say that's going to be a good short-term level to hold above next week. If we start breaking or clearing below 2900, then I've got to imagine that's going to cause issues and potentially roll us back over to maybe retest these lows. I, for one, would like to see a retest of the lows just to give us one more kind of confidence that, yes, we can go back down, retest, they are in, they are holding, and if buyers show up there again, that would give me more confidence than this move that we've seen just towards the end of the week. So on the downside, 2900, 28.72, the market again has been disregarding that, but the lows here at 28.26, those are going to be the next level, which was essentially the lows here from Wednesday of this week. So those are sort of the shorter term levels I'd pay attention to, and then if that starts to lose, we have the nice round 2800, which has been in play for many months now, really multiple years, as a key sort of psychological level for the market. So lots of levels to look at there and think about, but that's sort of what we're watching there. And on the upside, that 29.55 is the level I would want to see us get above on the upside. So that is the S&P 500. If we look here at the VIX, we can see the VIX closed down around 17 or so. So on the week, it was down just slightly. So if you recall, we closed last Friday at a 17.61 reading. We got as high as 25 intra-week, but we did close all the way back down to just about flat here on the week. So back down to 17, much calmer than the 2025 that we saw earlier in the week, and we'll see which way this ends up shifting into next week as well. Now, if we look at the IWM, we did get some clear underperformance here as well, 1.3% to the downside. This was the weekly close here for the Russell 2000. It is below last week's lows, so this was sort of more of a win for the bear case here, just on a follow-through day or follow-through week to the downside. We certainly did still stage a reversal. We got as low as 146 here in the IWM, and we did close at 150. So we did close well off of the lows, but it still puts us in just kind of this, at very best here on a weekly, longer-term basis. This is just a choppy environment that we've been in for the Russell 2000 for a long time now. That hasn't changed. So be interesting to see again, can the lows from this week hold? Can we make a follow-through week higher? These are all things that we're going to be looking for and waiting for in the coming, throughout the rest of this month. Finally, if we look at the NASDAQ 100, You can see this one here was down about minus 0.46% on the week. Nice reversal off of the lows. We are still below 191, the prior highs back from May, and very similar to the S&P 500, just kind of looking to see if the stabilization can happen. Can we get a follow-through week? Can we hold the gains? Can we hold this reversal from this week's trading into next week? That's what we're going to be looking for, is just to give us more confidence that the market is actually sticky here and buyers are starting to show back up and the worst is over. That's what we want to see, or measure if it's going to happen or not. So I think that's about it in terms of all the market environment. Again, you don't have to trade every day. Staying on the sidelines sounds like a reasonable approach. I know I, for one, as a swing trader, did not make a trade this week. Just totally sat there as a spectator and watched. It's not fun. It's not sexy. It's not making tons of money. It's just simply, stepping aside and not getting chopped up or losing, losing capital or losing the mental, aggravation of being involved in a two-way trading market. So with that, let's go into some of the other major markets. We'll go to TLT next, which did finish higher, 2.6%. This thing is really kind of ripping to the upside here. It got as high as 142, so it did come off of those highs. Lots of volume pouring in here as this continues to extend itself and act as sort of a safety haven for the market. MACD is at new highs here. The trend is up, so it is certainly overbought here in the short term by all traditional metrics. It is a very tough chase to the upside, but the trend and momentum are certainly in the bulls' favor right now, no doubt about it. So if you're involved, trail those stops, manage risk appropriately. And for me, not really interested in trying to short that unless it's for a real tactical short-term move. If you're an experienced trader, that can make sense, but not my cup of tea. I'd rather go for other weaker things on the short side. Now, in terms of metals, we'll go to GLD, which has also been acting quite strong here again this week, 4% to the upside. So really just seeing accelerations higher this week in terms of the flight to safety haven assets here. Gold extending its gain to over 140, closed at 141, holding on to the majority of its gains. It too is quite extended here to the upside, but the same comments apply. Trend is up, momentum's up, bulls are strongly in control here. It's a tough chase, so manage that risk, but it's an aggressive short if that's what you're trying to do. Silver, though, I think was the more interesting one because this was up 4.61%. This also had an explosive move. Remember last week, as gold started to break out, silver didn't really follow in its steps. It really just kind of stood sideways and consolidated through time the recent run up through the start of July, but now it's starting to really kind of get its mojo here again. It extended higher. It's pushing up, again, overbought in the short term, but this is clearly where you're seeing money aggressively rotate into: silver, gold, TLT, among some other safety places here in this market environment. Now, if we go to energy next, we look at USO. You can see this was down 1.74% on the week, but still well off of the lows from the week. It had a nice rally of about 7% off of the lows it made this week. So you can see it got as low as 1050. It basically undercut the bottom end of the range here from June. It had a strong move off of it back into this mess here. It still looks pretty messy to me, but all in all, looks like we did get a good reaction there off of those low to mid 10-digit numbers, price levels on the USO. So let's use that going forward and see if this rebound can continue to launch this higher. Last but not least, in terms of energy here is natural gas. This year did finish lower on the week, minus 0.86%, but you can see it is trying to hold on to these lows. Still looking at this and watching it. I've been noting the positive momentum divergence and the possibility of sort of putting in some type of low here if it can start to rally above that 1850 area. It's closing and it's just kind of clawing away and hammering right at this area right now. So it'll be interesting to see which way this tips. If we can start getting above 1850, then we can move back up into the end of the middle of that range there. For me, just still watching it, don't have a position for natural gas at this time. So with all that behind us, let's take a look at sectors here. Let's take a look at what performed and what didn't. On the upside, it was real estate. IYR breaking to new highs here on the year for 2019. You can see it's had a couple of attempts at this 91 area. They have failed both times. We've gone sideways and pulled off of those off of that 91 area, but now it looks like we're trying to make a more convincing move and break out to all-time highs here for IYR. The trend hasn't been like super strong. It's been more of a gradual kind of channel this has been rising in, so be interesting to see if we can kind of break loose here and really start to strongly trend. But IYR number one this week, up almost 2%. Utilities second place here, getting right back to the upper end of this range. This makes sense as sort of, again, a defensive area of the market. It was up 1.18% this week. It still hasn't quite broken out to the upper end of this range, so let's give it some, a little bit of hesitation here as it rallies back. Let's not get too excited until and if it can actually start to break out and resolve this 2-month range to the upside. Last but not least is materials. Materials here coming all the way down to 56, retesting some of the explosive move that we saw back here in early June when all this volume started pouring in, and we saw this really fast rip here above, starting from about $52 all the way up to about 57. We came down to 56, retested it, saw a quick reversal again, good volume coming in, and it did hold up this week, so 0.72% onto the upside for the week here. Materials third best performing on the week. Now on the downside we have energy, so XLE was lower by 2.21%, very similar to USO. It did put in a good reversal here off of the lows, but still now when we look at this pattern a little bit closer, it just still looks pretty messy here. It kind of looks concerning. There's a lot of volume that's come in recently, so maybe we sort of finally washed out, but for me, just doesn't really appeal to me or excite me one way or the other. So for XLE, just kind of avoiding it. Financials had a more sort of robust retest this week, I would say, just over $26, $26.30. That's been an area where we've been chopping around and had some inflection points in the past. We came down, tested it, rebounded off of it. We're still down. Again, it was still the underperformer on the week, minus 1.6%, but it did get a little bit of reaction there, so it'll be interesting to see if they can hold that area. It's going to be important for financials to hold above this week's lows. Last but not least is semiconductors. Semiconductors down 1.5% this week. It really gave a lot back, and very quickly so last week. It tried to stabilize this week. It did stabilize this week, but it still looks like kind of a messy pattern here. It looks a little bit concerning. Not sure if the bottom's in yet. Just kind of holding down near the lows, and again, still kind of underperforming the pack right now. So it was quickest to go up, kind of quickest to come back down, and now we're waiting to see if buyers can step in and support this with some type of higher low. So that is it. That is the weekly recap there. Lots going on, lots of movement, two-way trading, day traders enjoying this volatility, I have got to imagine. Otherwise, shorter-term swing traders, probably a little more pause at this time seems right. So that's it for me. Thanks so much, as always, for tuning in and watching. You can subscribe to our YouTube channel, follow us on the Trade Risk. Have a great weekend, and we will see you next week.